People work in your property and they pay you rent. 3. Commercial buildings. Businesses use your space to sell stuff and pay you rent. And 4. Land, which can be cultivated, developed, or even left as it is for appreciation. Now, super important here, the house you live in is not an asset, okay? It's a liability. It costs you money to live in it, and it's not putting any new money into your pocket. Number 3, bonds. When governments or businesses might be in need of some cash, they can issue something called bonds, which are sold to interested investors. Now, through these bonds, the government or business vows to pay the person buying the bond a certain amount of money every month. Generally, bonds have an expiry date on them from 1 month to 30 years. These are super safe investments because they're mostly backed by the government. As you probably know by now, low risk in business translates to low reward as well. Bonds are usually in the 3% yearly return range, which is better than what most banks offer, but not high enough to get a beginner investor excited. When the bond reaches its end, the principal amount is returned to the investor. The main ways that people buy bonds are 1. Directly from the Treasury Department, or 2. Through a brokerage firm. Number 4. Stocks. Now, stocks are not as complicated as all those Wall Street films make you believe. Stocks are an easy way for you to own a percentage of a publicly traded business. So if a business issues 10 million shares and you own 1 million of those shares, you're a 10% owner in that business. This incredible breakthrough in financial instruments has allowed the average person to own a stake in some of the most lucrative companies of our day with very low entry barriers. Here's how much you need to pay to purchase 1 share into these companies. Number 5. Mutual and index funds. If stocks allow you to purchase shares in a company one by one, mutual and index funds bring multiple companies together so you're buying into the entire basket of companies as a whole. Why is this better? Well, basically, you're more diversified, so it's a safer investment to make. Statistically, index funds are one of the most best-performing asset classes. The 5 most popular index funds are the following, in no particular order.